Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm not going to talk about Forex. I'm going to talk about the broader stock indices are getting hit hard with the NASDAQ index leading the way to the downside. So let's take a technical look at these broader indices and see what the charts are telling us. I'm going to start by taking a look at the S&P index, and this is the hourly chart of that of the S&P index. And if you look at the retracement level of this move up from this low to this high right here, this is the March 2022 low. The market is approaching or getting closer to the 50% midpoint of that move to the upside that comes in at 42.07. A lot of talk on the financial stations and analysts about the 4,200 level as a level of support for the S&P index, but we are getting we got strong JOLTS data, which is helping to push the prices down, interest rates higher as well, and of course the 10-year yield is on a race to the upside. It's now currently up 8.1 basis points to 4.76%. So that is scaring stock investors and pushing the price to the downside. We'll see what happens if the momentum does continue. We're currently trading at 4,235, so only about 28 points away from that level. Certainly doable trading here today, as a matter of fact. So keep that level in mind. What is interesting off of this hourly chart is that the high price that we saw over the last few trading days, going back, I guess, to earlier this week, did stall against the 50-hour moving average. I'll zoom in and look at those levels here. You see the black line right here that represents the 50-hour moving average, and the corrective highs stalled against that level, stalled against that level, stalled against that level, and rotated to the downside. We are seeing pretty strong selling pressure in trading here today, with the first two hourly bars moving to the downside here after the JOLTS job data. Let's take a look at the NASDAQ index next, and if we move back in time here and look at its move from the March low to the high, the 38.2% retracement has been breached today at 13123.40. The current price trades at 13088.90. Below that level, also of note is that the in this case the 50-hour moving average was breached last week and this week I should say, and price tried to stay above that level, but the move to the downside in the first hour of trading pushed back below the 50-hour moving average. That level currently comes in at 13194.75. Stay below that level would keep the sellers more in control in the short term. Also, 38.2% retracement is certainly going to be a level that traders are going to use as a barometer for bullish above, bearish below. So as long as the price can stay below the black line, stay below the 38.2, sellers remain more in control. For the NASDAQ index on the downside, we have the low price that we saw in last week's trading, 12963.16 as the next target on the downside, followed by the 50% retracement of that same move to the upside. That level comes in at 12714.68. So as long, from a technical perspective, when you deal with stocks, if the stocks, especially broader indices, if the price remains below technical levels, you have to say that the price has the potential to move sharply to the downside. That's where we use it. Most of the time, stocks move higher, but in this case, if you're below those technical levels, sellers are in control, and that could lead to further downside momentum toward our next target level. So be aware, be prepared. So there you have it, a look at some of the broader stock indices as the markets become very volatile. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.